Hi all and welcome to our weekly report for the week starting Monday the 2nd of March. We have a busy week ahead of us which starts with China, Eurozone, UK and US manufacturing PMI data on Monday. On Tuesday we should be on the lookout for RBA rate decision and statement, Eurozone preliminary consumer price index and unemployment rate. Going forward, Eurozone retail sales data, US ISM non-manufacturing PMI figures and Bank of Canada interest rate decision and statement will be closely watched on Wednesday. On Thursday, the main point of interest is Australia trade balance in addition to the US jobless claims data. The week will finish on Friday with probably the most anticipated data release for the forthcoming week, which is US non-farm payrolls, unemployment rate and average earnings data. Now, let's take a look at few markets. This is the intraday 4-hourly chart for euro-dollar currency pair, which is downtrending quite nicely in longer term timeframes. However, we saw an oversold bounce back recently from the overextended multi-year lows around 108. We are reaching some fairly important resistance levels from the daily and intraday point of view. So the key trading level for us to watch is at 1.10, which is a nice and round number, and also the cluster of the previous lows as well. Bears are potentially looking for a rejection or a reversal around this level and a swift move lower for this continuation of the downtrend, basically the downtrend to continue, potentially opening the way for an extension to the downside from either 50 or 61.8 fib retracement, which was identified with this 31st of December swing high all the way to the current swing low. So the extension to the downside towards initially 109.50, confirmed loss of that level, could open the way for a deeper retracement to the downside towards 108.70, 108.50, 108.20. Alternatively, if this resistance doesn't hold and fib 61.8 retracement gets broken to the upside and the market moves swiftly higher, then the logical level for resistance on the upside is at 1.11, a cluster of these lows here and also these highs and also a round number. Confirmed breakout above 111 and end of day close, possibly a retest of that level from above as a newly found support, could negate a bearish scenario, potentially opening the way up for a spike higher towards 111.50, 112, possibly even 112.30. Cable sterling dollar is downtrending yet again in 4-hourly time frame, creating the sequence of lower highs. The current price action is capped by falling resistance trend line, and it's also trading below multiple moving averages. Key trading level going forward for cable is at 1.29, cluster of these previous lows, therefore a horizontal and also the mixture of moving averages. If we see an oversold bounce back from a current lows at 127.50 into 129 and the rejection from that level, that would further confirm bearishness. Alternatively, if we see a spike above 129, the next level of interest could be at 129.50, 130, which is our 200 period moving average and also this longer term falling resistance trend line for a rejection and a move lower, potentially indicating an extension to the downside towards 127.50, 127, 126, 125.50 to the downside, and which will be referenced as a support. Alternatively, if we see a breakout and end of day close above 1.30, retest of that level from above as a newly found support, that would negate the bearish scenario, potentially opening the way for a spike higher and retest of additional upside resistances towards 130.50, 131, 131.50 to the upside. Dollar Japanese yen had a corrective move lower, therefore Japanese yen strength. This is part of a risk play. We had a massive sell-off in global equity indices or global equities in particular, and yen was reacting to that as well. Key trading level going forward is at 109. this is resistance to the upside. If we see an oversold rally from the current lows into 109 and a rejection from that level, that would open the way for a deeper corrective move to the downside, potentially targeting 107, 106, possibly even 105 to the downside. Alternatively, if we see a rally from this oversold levels and breakout above 110 level and the retest of that level from above as a newly found support, that would negate the current bearishness and potentially open the way for a spike higher and retest of additional upside resistances towards 111.14, 112, 112.60 to the upside. Gold was also reacting quite in a fairly volatile way as well. Initially we had a spike higher when equities were selling off, and lately we had a fairly decent pullback in gold. From the intraday point of view, we are reaching a fairly important and interesting level. We have a rising support trend line here, and we also have the cluster of these previous highs, therefore horizontals, at 1585, which was the breakout level of this longer term consolidation and the beginning of this aggressive move higher towards 1690 high. So bears are looking for 1590, 1600 resistance to hold. So therefore, if we see a spike into that level and a rejection, or if we see a gradual move lower and a dip below these current lows at 1565, 1560, that would open the way for a deeper corrective move towards 1550, 1540, possibly even 1500 over a longer period of time. Alternatively, if we see this price action consolidate around 1585 and moves higher and breaks above 1600 resistance, that would further confirm the existence of this embedded uptrend, potentially opening the way for the move to the upside, targeting additional resistances towards 1640, breakout above that level 1660, possibly even 1680 to the upside. Crude oil, fairly bearish reaction as well. The indication of the greater probability of the lack of global demand is pushing the crude oil prices lower. This is the 4-hourly intraday price action. We have a sequence of lower highs. The price action is currently trading below multiple falling moving averages, 20, 50 and 200. Key trading level going forward is at 49.50 or 50 level. Cluster of these lows and also a round number as well. If we see an oversold bounce back into 50 and a rejection from that level, that would further confirm the bearishness, potentially opening the way for an extension to the downside. Alternatively, if we see a loss of these current lows at 44.50, 44.30 and a gradual move lower, that would also confirm a bearish sentiment, potentially opening the way for a deeper corrective pullback towards 42, possibly even 40 to the downside. Some longer term analysts are pointing possibly to a corrective move based on weekly and monthly timeframes, even to about $35 or $30 per barrel. Yet again, much longer term. Alternatively, if we see a breakout above 49.15 or 50 and end of day close above that level, retest of that level from above as a newly found support, that would negate the bearishness, potentially opening the way for a rally higher and corrective retest of 50 to 63 resistance, 54, possibly 55, 56, 11 to the upside. Thank you for watching. Thank you for listening. Stay safe and happy trading. Bye for now.